Welcome back to another episode of the Scale Your Real Estate Podcast. Hey, today I've got an awesome guest whose name is Ping, and Ping is really a wizard at raising capital and sourcing deals. And when I'm looking for people to partner with, to bring onto the show, I'm always asking, what is their superpower? Now, they may not be good at everything, but they're good at something, and those are the two things that Ping is great at. And I'm so excited for him to share his wisdom with you in this episode. Check it out. I really want to deep dive with you, man, on just what I feel like are a couple of your superpowers, which are, raising capital and finding and sourcing deals. And I'd be happy for you to plug your 8-week course. I know you're launching that pretty soon. So happy to talk about that. And I think any kind of content you can give here to get people excited about that would be really great as well. I actually was planning on asking you a bunch of questions around those two subjects. Even before I saw your post about the 8-week course, and then I saw your post about the 8-week course, and I was like, wait, raising capital and finding deals. Like, that's literally what I want to talk to you about. And I think those are two subjects that are just desperately needed right now.
Yeah, exactly.
Because, the truth is inventory is still low, man. I don't know how it is in Toronto, but here in Charlotte, for example, but I also know this, people are not selling their homes at the same pace, because they're locked into their 3-point. I know for me, I've thought about moving from my house a bunch of times, but my mortgage on my house that I'm sitting in right now is 3.13%.
Right.
Fixed for 30 years. Like, I'm going to go and change that for a 7% or a 7.5% loan. And so my affordability, if I can afford $1.5 million, then I'm going to afford $750,000. And that's hard because prices haven't really dropped that much.
For sure.
So what's your take? Why are you so focused on those two subjects, raising capital and sourcing and finding the best deals? What is it about the market today, or just why are you focused on those things?
I think that because that's the only way, because we all talk about that real estate, how you make money in real estate is in the buy, right? So if we're not developing a skill set in finding the right deal, finding a better deal, like on the market, off the market, and change different strategy, the deal flow will die, right? Because you end up losing the momentum. And once you lose the momentum, it's hard to pick that back up, right? And also it's hard to recognize the deal when it really comes your way, right? So that's why I really focus on that. And obviously we can go in depth a lot with many different asset class. It could be single family, it could be, for example, single family converted into Airbnb, could be a duplex conversion, could be, multifamily, right? All that stuff comes back to how you build your funnel, your deal funnel, so that the deal flow flows into you. Then you can kind of decide what you want to do. You can choose not to do anything because of the environment, right? Or you can choose to flip it over to another investor who's looking for that specific asset class. Or you can try to raise a bit of capital and close it on yourself, right? So that's why I'm very I see a lot of investors and also wholesalers start losing that momentum because of the environment. But every time I see the attention being fading away, I want to kind of double down on that. Try to do things that are opposite of what the market is doing, because now the is going down, attention is going down, which means the demand is coming down, which means there's going to be way more opportunity for one of us to capitalize.
Wow, that's why you're so successful, is because you think kind of counterintuitively like that. I remember I have a good friend who's a realtor here in Charlotte. His name is Jason. And when 2008 happened, he said that in Charlotte, and don't quote me on the actual numbers, but he said that Charlotte lost 70% of its agents. 70% of the agents just went off and got other work because they were like, the market's crazy. We don't want to even try to be in this market. And he said the real estate market only went down 35%. So 70% of the agents left, but the market only went down 35%, which means the agents that stayed had more business.
That's it.
That's kind of what you're saying, right?
Yeah. Because cutting down the expenses is one thing, right? Growing the business is another thing. And different market has a different strategy. Most people got on the hype of the market in the past 2-3 years. The truth is, whatever you do, whatever you invest in, you all make money, right? But during this time is where it tests the true, talent or people who are actually, strategize their whole career, right? by the way, 70% is the number over there, right? We have about 90% of agents who fail in the first 2 years. This is a stat from our brokerage, right? Our board, real estate board, right? And I'm seeing so many people falling off because, again, like in the past 1 to 2 years, it has been very challenging for them to be closing deals. But for those who are staying in, these people are becoming a high performer. And imagine if they get through this wave, boom, all the volume is going to double and triple in the next year because they built such a nice foundation when everybody else has decided to choose the easy way out.
Yeah, that's so great, man. It's such a great way to think about it. So what do you think is going to happen in the economy in the next 2 to 6 years? What do you see? What do you see? Do you look that far ahead and kind of try to plan for it? And if so, what are you doing to plan for it?
Yeah, so honestly, there's so many different components in here, and I feel like I'm going to try to be careful with my answer. With the whole economy, number one thing that I always tell people is that we can't control the uncontrollable. Let's focus on what we can control, which is our skill set, which is our network, right? And obviously the vision of our business, right? Try to focus on that as much as possible, but pivot along the way. So in the next 5 to 6, 7 years, the truth is like if I can predict the market, I wouldn't be here talking about that, right? So it's very difficult to do that. But at the same time, I do firmly believe that the real estate market wouldn't drop the way it did back in 2008, right? Because so many people locked their interest in for 30 years in the US. In Canada, we have a tons of immigration coming into Canada. Last year, we had a little over 1 million immigrants plus international students coming in here. We only had 225,000 units built across the entire country. So the demand and supply is so imbalanced that I don't see real estate going down. And people who are coming in here, they all have some sort of financial resource. The government is not that stupid.
Right.
So, I mean, like people can argue different points, but the moment that they're allowing people in here, like you gotta have some sort of financial backing, right? So yeah. I don't see it breaking, dipping the way it did back in 2008. But I'm definitely seeing a lot of fear in today's market. So if we can stretch it to a 5-year term, and in Canada, we're unable to solve the inventory issue, right? Because the cost of construction, the cost of the labor is still continuing to rise. Then if we're playing 5-year game, we just need to figure out how to get to the next 1 to 2 years. And the rest, I think, is going to be okay. Okay. Now, in the US, there's also multiple different strategies. If you're in states where you're losing your people, for example, California, right? My strategy will be completely different. I might actually choose to go to Texas, Tennessee, or like Florida, depending on obviously your risk tolerance, right? Your strategy might be slightly different.
In this market, what is your favorite strategy for cash flow right now? In terms of like a beginner investor looking to become financially free through real estate. Obviously, because it's my big, it's what I'm promoting. It's what I really believe in is co-living, the shared housing strategy. But what's your take on that?
Okay. Creating cash flow in real estate is not going to happen in today's market. 7% interest rate. You're not going to find any single family or even duplex that cash flows, in my opinion, right? The only way to do that is through active approach. Right, you can do wholesaling, you can do flipping, you can do co-living, you can do Airbnb. All those are active approach. And I think people, the idea of doing everything passive or building a passive machine, that is gone. Right, it might come back once the interest rates are dropping, and then we're seeing a different market. Maybe that's going to come back in a year or two, or later. Right, but for today's market, you have to be taking some active approach, because if you don't draw the active income in, $200-300 cash flow from a rental property is still not going to be you won't be able to sustain yourself, right? So my favorite strategy right now, like I'm actually going fully on the active approach again at this moment. So we're trying to obviously like figure out how to build a deal sourcing machine, right? And the reason why I'm really teaching people about this type of approach is because now I'm building multiple different funnels from our students, the members from our program. Once they learn what we do and they start slowly build that up, they always come back to us and say, hey, Ping or Andrew, hey, listen, can you help me assess this deal? If we see that it's a good deal, one of the two things can happen. You see that we pick it up, or we just invest with the students on and try to like operate that project. Right. So we're constantly doing the active approach, and that's why coaching became like our focus this year, to really teach people exactly what we have been doing in the past 10 years. Right. Learn our model so that you can duplicate and so that you can implement. And once you can implement, then we can duplicate our business model and to try to turn our business model from here all the way to here.
So when you say active approach, you're basically, I was interviewing on this podcast. I interviewed an episode that just went live by David Green, who's one of the hosts of Bigger Pockets. And he was saying that one of his strategies to find deals that have the highest cash flow, he goes, the deals that have the highest cash flow usually have like what he called a higher barrier to entry.
Yeah.
And I think that's similar to what you're saying with like, hey, it has to be something that's like not everybody can just go buy and be super hands off. So for you, it sounds like co-living would fall into that because there's more moving parts. It's almost like an Airbnb. There's more moving parts. There's more active things you have to take care of. But I mean, you still could hire. There are companies out there, my company being one of those, that will manage a co-living property for you. Pad Split is a company that will manage now granted, they're going to take their percentage of the cash flow, a pretty good chunk of the cash flow.
Sure.
But if you could find a way to maybe take some of those active approaches and make them more passive, what are your thoughts on that?
Okay, so because your initial question was if I were the beginner, right? If you're the beginner, you kind of don't have that choice. You have to be active. Now, the moment that we're talking about a little bit more passive approach, utilizing other people's companies' resource, I would imagine this person's qualification or financial resource is a lot better than the first scenario that we discussed.
Yeah.
In that case, so in that case, the moment that you get into a more like intermediate investor type of stage, right? Now your focus is all about scaling your portfolio. Okay, which means you cannot be caught up with a daily operation, right? Any average person, I think, can manage maybe like 10 properties without any issue. The moment that it gets to like 15 voices, tenants, right, requests coming in here, it gets pretty heavy. So now you have to either build your operation or you can outsource the operation and just focus on the acquisition, right? So that's the scaling point is where things gets interesting because everybody's financial resource and network is so different, right? And there's a comfort level, right? Some people really enjoy building a business like you and I, but there's going to be people who just want to kind of focus on their full-time job and put it aside. This is going to be a 5 to 10 year term for them to really invest into real estate and reap all the benefit afterwards, right? So for those people, then delegate as much as possible. Get your time back because your time is not in property management, project management. Your time is in your full-time job and spending time with your family, right? So to answer your question, it still depends on everybody's situation, and obviously everybody's end goal, like where they will feel like, okay, I finally achieved my goal. Right. And based on that, you work backwards and see what makes sense to you.
That's great, man. Yeah. Sometimes I describe this as house hacking versus co-living. It's kind of what you're doing. Like house hacking is maybe the answer to my first question, right? Like you're a beginner, you're in there, you're going to do the active work, you're going to get the roommates, you're going to vet everybody, you're going to, sign the membership agreements or the leases. And then co-living is when it can become more of a business. You're passing it off to somebody. It's more of a sophisticated investment strategy at that point. You're leveraging out a lot of those moving parts.
Okay.
So you mentioned deal sourcing machine. And this is, man, something I want to really go deep with you on because I think it's one of your superpowers. I've kind of seen your content on this. And so the two big subjects I'd like to dive into you on are deal sourcing machine. I'd like to go into that. And then just your experience raising capital. I'll be honest. I have bought most of my homes that are co-living, and I have about almost 200 doors in co-living right now.
Nice.
Almost all of those have been bought on market, which when I say that is crazy and people don't believe me. They're like, what? You're finding deals that cash flow on market? And it's because I've gotten so creative.
Yeah.
But I'm curious, how do you teach this deal sourcing machine? Tell us a little bit about this deal sourcing machine that you've created. I know it's something that you teach. I know you've got this 8-week course that you're launching, which I really want people to go, if they want to go deeper into this, I want them to go check that out. But tell us a little bit about your deal sourcing machine. First, tell us, how do you think about deal sourcing? Because I always believe that success leaves clues. So if you're successful in this, I want to find out, what is your mindset on it first before you teach me some of the tactics of how to do it? So how do you think about it? What's your mindset about?
Okay, high level stuff for deal sourcing. Number one, if you control the deal flow, you control the margin, basically, right? That's why wholesaler can decide on what the assignment fee is, right? As long as there's enough room for the house flipper. If you're wholesaling rent to own contract, you can also decide how much. Some people also wholesale multifamily deals, right? With the VTB terms and all that stuff, right? Make it super favorable to the next investor. So if you control the deal flow, you pretty much control the entire margins already. So that's why I think it's the number one skill set that everybody needs to kind of like pick up. Now, there's two different ways. One is on market, the other one is off market. How do you go with on market? On market pretty much means that you need to get into the deal or enter the deal or negotiation before everybody else does, right? I also picked up 60% of my deals on the market. 40% is more like a off market. Sorry, opposite. 60% off market, 40% on the market, but the percentage is still pretty high. And the reason why I did that was to boldly offer, right? If I know it's in a very competitive environment, I want to get in as soon as it hits the market. I want to enter that negotiation right away, right? And if the seller wants to wait until sort of a offer presentation date, I'm not interested. I'm going to walk away, right? So I'm very selective with the seller or even the property type that I'm selecting, because when I approach them, it has to be under circumstance where I can feel like, hey, listen, I'm going to help you make a decision quickly so that you no longer have to deal with other people or even like more showings, because they might have a lot of pets in their house, and every time they need to arrange a showing is pain in the butt, right? So I'm looking for those type of motivation, and once I can solve that motivation by bringing them a quick offer, a cash offer, and we can seal the deal. Boom, that's a good deal on the market.
Right.
Okay. So that would be
it's about speed, is what I hear you saying. It's on market is about speed. Yeah, I agree with you.
Yeah. And the second approach will be people, obviously, the listing has been on the market forever, right? They have a wrong expectation from the very beginning. And then they eventually run out of time because they might need to relocate. They might have another property closing coming up soon. So they end up losing the time that they need, which means I can come in here and just offer a price that they have to close on, right? So there's two different ways, but I never actually close on a property in between, right? If the motivation of selling is low, I'm much better just working on different funnel. Okay, so that's on the market. Now, off the market, what I like to actually show, especially the beginner real estate investor, don't do flyers, don't do door knocking, cold callings, and all that stuff. I feel like initially it might be like there's a lot of courses out there teaching people do that, but 95% of people fail. And part of the reason is because even based on our company data, we're spending on average about $8,000 to get one qualified deals in Toronto. Okay, this number might be different for other places, but it still makes sense for us to do, because every 8,000 we get 50, 60, 70K in profit back. So it's still the right marketing approach. But for a lot of beginners, they had zero expectation on, or they don't know what to expect in terms of how much more money they need to invest in. So I tell them that, listen, instead of you doing that, talking to 100, 150 people to get that one qualified deal, why don't you try to leverage other people's contact? Instead of go from B2C, like business to seller directly, switch that to B2B2C, where you have the agents who's already talking to these sellers, right? They're already farming in a specific neighborhood. You just need to build good rapport with the agents who are investor focused, get them to kind of understand your criteria. And instead of talking to 100, 150 people, now you get to talk to 10 agents who can bring you maybe 2 or 3 deals at a time. Now you have 10 agents giving you 60 deals instead of talking to 100 sellers and getting one qualified deal. So that's kind of my approach. And agent is just one of them. There's also property managers. There's a home inspector, right? There's many different real estate professionals that you can also build a rapport with.
So I like this. This is leveraging, your network. This is almost like going after people who are like warm versus like just cold calling.
Yeah.
Right? Because these people are going to have additional relationships. I like that. Here's what comes up for me as you say this. Maybe some of the listeners can understand this. Like when I hire people for any of my companies, I used to just put an ad out on like Indeed.com or Monsters Jobs or any of those big websites that we have here in the United States. And it's a pain in the ass, right? Like you're saying, it's like you have to sort through hundreds of resumes. You have to have all these calls. It's all this work. It's costly, versus if, let's say, I needed to hire a new executive assistant. I just blast out to all my friends and say, here's what I'm looking for. Who do you know? Or who do you know that knows this person? And usually I have to reach out to less people. They're more qualified. They're in my network. So a lot of times they either know me or they know of me. So therefore they're like, there's already trust built. I'm not starting from scratch with somebody. So I think the word that Keller Williams uses is like allied resources. I'm like reaching out to my allied resources, right? Are you with Keller Williams?
No, I'm with EXP.
EXP. Okay. Well, I've taken this class called Career Visioning. They used to call it Recruit Select. It's a very popular class that Keller Williams taught, and it was all about hiring. That's one of the things I learned from them was what you're saying. So you're taking that same concept that I'm explaining, you're applying it to finding deals, which I love. So what are those professionals? Like if you were coaching me right now and I said, I'm in, I get this strategy, I want to go after relationships in my network, who would I go after? Realtors, like investor focused realtors?
Yep. So that's number one, because again, like they're the most in tune in the market. Number two is property managers. People underestimate the connection that property manager has. And the reason why I say that is because we also own a property management company that currently we have over 800 units under our management. That division is drawing tons of off-market deals for us. Because guess what? Landlords who are having trouble managing their property, either with extensive repairs that they don't have the funds to do, or they're trying to or they're having some like troublesome tenants that they're just sick and tired of dealing with dealing with the communication with the tenants. These people are coming to us because they were like, hey, listen, can I just find a property manager to deal with that problem? Let me pay to get rid of the problem. Okay, especially in Ontario, because our landlord tenant board is extremely tenant friendly. It's 10 times worse than California, by the way.
Wow.
Yeah, so when people come to
more
us,
landlord friend, it's more tenant friendly.
Very tenant friendly. Yeah.
Wow.
Right. So when people come to us, the number one questions we ask, hey, what do you need? Right. And then we try to qualify them for their financial resource and see if we can actually help them to solve that problem as a service provider. That's what my property management division is doing. Right. But if they say, hey, listen, the moment that they start haggling on the prices, right, which I can understand, right? Investors' job is try to keep the cost as low as possible. But this is where we convert them into, hey, have you thought about just getting rid of that property? And let us help you move on to the next property where it's easy and whatever, so you don't have to deal with the same type of situation. The answer is almost yes. Yeah, if the price is right, like I'd be willing to just offload it and never think about this property. Great. How can we actually make that happen? Right. So we are doing that, and property management is such a strong funnel for us. And that's why we're like, listen, just go work with some property managers who are not investment focused, right? They're doing this because they just want to make some money, maybe with the integration of their sales business, realtor business, right? Or maybe it's just a property manager who just wanted to kind of manage the properties around their like in their neighborhood, right? Find the mom and pop property managers and go chat with them. Just be like, hey, listen, I'd be interested in knowing or try to work with you. Every deal that I can close or every inquiry that comes in that you cannot take on as a client, I'd be happy to actually enter into the conversation with you, right? And if we can close something, you're gonna get your cut, sort of like a referral fee for the property manager type of thing. And that, as long as you can offer enough compensation, guess what? Now all of a sudden you turn those property managers into a lead generation for landlords who are having trouble with. Okay. And even better is that if they happen to have one property under their management that they're having trouble managing because the landlord's giving out a lot of pushback due to the lack of financial resource, guess what? Maybe this property needs to be sold ASAP. Can we work out a deal together?
That's awesome. You mentioned so property managers. That's brilliant. This is such gold, man. The investor focused realtors, you mentioned home inspectors too. Who else should we be looking at?
Yeah, honestly, home inspector is more of 80% of effort for 20% result, or even less than that, right? So
got it.
Let's focus on these two first, because these two are our strongest value. Right, I
like it. Let's apply the 80-20 rule. Let's not go. I'm always the go big guy, but you're like, hey, these two. I think what ultimately you're saying, what I want listeners to take away from this though, is just the power of the relationships. And I know that may sound obvious to you because this is a superpower of yours, but to me, I'm not really that. I wasn't in a big part of my career. I was not focused on building these relationships with people who could bring me deals. I was just like, oh, I'll just find everything on market. I don't need to have these relationships. And now I'm starting to have to go, oh, no, wait. It's important that I build these relationships. And so I'm doing a deal right now. I just did a flip. I don't normally do flips ever, like maybe 2 in my whole life. But I had a friend, my wife's assistant, met someone at her church. She needed to get out of the home quickly. So she brought it to my wife. And the reason she did that is because she knew we did real estate. So it's like, that's the power of like even you on social media, putting the word out there. I tell my students all the time, like, if you want to raise capital, and I know we're going to dive into that in a minute, but if you want to raise capital, like first just start spreading the word that you're in real estate.
Yeah.
Like a lot of your friends think you're an engineer because that's your day job, or they think you work at whatever restaurant because that's your day job. But like if you start putting out, hey guys, so I got this one client who just started to like post every day. He posts something about co-living. I'm like, he's building this momentum so he can raise capital and bring deals. But my point in saying that about my wife's assistant is that we got this deal. We rehabbed it. I used my contractors. It's under contract, and it'll probably be an $80,000 or $90,000, profit deal just from a relationship of someone knowing. And so I think that that's so key, man. What else is important when you're thinking about building a deal sourcing machine? What else is important? How else do you think about it?
Oh, we can go so much in depth on this subject because so here's the thing. Those are just funnel, right? So let's say if I talk to 10, 15, 20, or even 100 realtors, right? Investor-focused realtors in different regions. And I started having deal flow coming in. Or maybe property managers start bringing some deals coming in. Now, the second thing is that how do you actually determine the ARV, right? A lot of people are like, okay, I need to haggle. But no, it's not true. It's just you need to be able to determine what you're trying to achieve here, right? What's your minimum margin? What's the ARV? And what's your maximum offer that you need to put in? So the second step is literally just deal analysis, right? Try to analyze or pick up those numbers as quickly as possible because good deal doesn't wait, right? Doesn't wait for you. Good deal will get picked up almost immediately, right? By other investors if they can process information a little quicker, right? So in my actually 8-week training, I kind of just broke it down into this sequence, right? When the deal flow comes in, now you have to analyze the deal. Now the second thing is, the one after is like, how do you actually negotiate? And this is where I talk about negotiation is kind of like a sales, right? Tonality matters. How you say a sentence can mean 2 different things, right? And I joke around with many of our students and many of our members. I'm just like, when Joy, my wife, calls me, hey, Ping, versus, hey, Ping, right? It tells me 2 different things. Like, I'm expecting 2 different things. So those tweaking in tonality and the message and sort of our script, it actually will lead to different results just based on how you approach them. In today's market, there's way too many beginner investors that try to like get into the offensive mode, right? Try to attack other people's condition properties and try to bring the cost as low as possible. Why don't we change a different approach? Hey, what do you need, right? I see that you're doing this. I'm sure this home is like, it is important to you, right? Like bring out the human element in that conversation. And from there, just be like, hey, listen, honestly, I'm an investor. Or you can say, hey, I'm a family, like I'm a very, I guess, a community guy. Like I just want to kind of fix it up, right? Provide a little bit more housing. And then from there, I can provide a little bit. If you keep yourself a little bit more humble and take that kind of approach, usually like it makes people want to work with you, right? So step by step is like deal flow and then deal analysis. How do you actually have a conversation with both seller, maybe property manager and realtors, and try to get all of them to want to work with you? And then you move into sort of like a, like your offer, because your offer now needs to be like, I guess, your offer needs to protect you, basically. So the right condition, right clause, contingency points, and all that stuff. And after that, you can kind of figure out your strategy afterwards.
In today's market, how many offers are you having to make before you get a deal? Is there a general rule that you teach? to investors on like, hey, don't be, because I see beginner investors all the time get so frustrated when like their first one or their second one doesn't go through, and I'm like, come on, guys, like we're in this. This is the long game.
Yeah. So whenever I get that answer, I usually just tell them that, listen, forget about the actual conversion rate, right? Because like here's the thing. Any beginning investor, they get frustrated pretty quickly because they get on the hype of, hey, I'm going to be in real estate. And then all of a sudden they realize how difficult it is. But the truth is consistency is the key. So I told them that, listen, my conversion rate is this much, right? Anywhere between like 100 to 150 conversation for us to get into one really good deal. Okay, that's a lot of work. But here's the thing, focus on just making one verbal offer a day. It's not that difficult. Right, just focus on that because here's the thing: the number can fluctuate quite a bit based on the market condition. It can fluctuate quite a bit based on your skill set because you might be getting better at technology. But too many people are thinking about, oh, I need to make 100 offers. No, just focus on making one offer at a time, right? And make sure you don't lose that momentum. And at some point, you're gonna actually have some sort of conversation that's leading to an actual deal. That's where we can have a conversation about, hey, this worked. Let's double down on that. Let's increase the volume on that. Maybe instead of you doing one offer, maybe now we need to do 3 verbal offers. And maybe out of 10 verbal offers, 1 is going to be an actual offer that you submitted through your realtor. Right. So I like to kind of focus on like put a bigger vision on the back of our head, focus on daily habit and I guess the development. Once we can hit that every single day, which is what I call KPA, key performance action, that will lead to the right KPI for you.
Wow, that's great. So KPA is like in sales, I think they call that the lead indicator.
Yeah.
Right? That's like the input, and the KPI is the lag indicator.
Exactly.
This is what's happened. That's beautiful though. I've never heard KPA. I got to be honest. Key performance action.
Yeah.
One verbal, that's gold. And that's probably, I think if someone's a beginner investor and they're like, well, I don't have that flow yet. I mean, you could still put one verbal offer in on a day, even if they were on market deals, right? If you're just on market, off market, like just make an offer a day.
Yeah.
Even if they're aggressive offers.
Exactly. And the truth is that verbal offer is not hard, man. Like if you can run the numbers, if you look at something, you're having a conversation with the agent, just be like, hey, listen, like I know the price is at, depending on the area, but let's say asking price is like 400K, right? You're like, hey, listen, like based on my number, I'm going to have to go below asking, am I wasting your time? Oh, no, bring the offer in. Okay. The number that actually works out for me is about 350, right? I don't want to waste your time. I respect your time, right? But would that work for you? Like, would you spend the time to actually prepare an offer? If they say, you know what, let's see what happens. Boom, that's one offer. That's one verbal offer that you made over the call. It's not that hard.
That's a good script. That is a good script.
Yeah. And if they say, no, that's way too low. Okay, I don't want to offend my clients. Okay, no problem. Honestly, I like working with you. You're very honest with your position, right? If you see anything that fit into my criteria, I would love to actually work with you and have you earn that commission on my end. Because you are motivating the agents to double in the deal. So yeah, that's why I think building rapport, building connection is so important.
But the way you did that is that is the most aggressive, not aggressive way to offer. What is 50,000 of 4? Was that 10% would be 40 grand, right? So 15% below that is a beautiful script. I hope people wrote that down or re-listen to that part. That leads into my next question for you. I was going to ask you, like, what advice do you have for somebody who is shy to be aggressive about like, oh, I don't want to offer that because like, what if they get offended? Or like, what if that's too low for them? I mean, honestly, you kind of answered it already because that script is so like, it's so soft and it makes them feel special while also getting your number across to them. So I think, but what other advice do you have for someone who, their numbers work at, really low, but they want to make the verbal offer anyway?
Yeah, I think being honest is the key here, right? Because sometimes people come up with a completely different script or stories to get to that number, right? And the moment that stories don't add up, right, people will lose that kind of trust and you end up losing that transparency. And you have to regain that trust again, and it just becomes a very messy conversation, right? Because now people are poking your lie, right? And you have to lie again to cover that lie. So usually, like honestly, if you're talking to realtors who are investor focused, just be like, hey, listen, I'm an investor. I just want to like make my number work. Or if you say, hey, this is my very first project, I just want to live into a property that has a bit of value add approach so that I can do some work myself with my parents or with my uncle, right? We want to, or co-living, like me and my buddy, we're trying to like find a couple projects that we can like fix up a little bit, right? If you make that very clear, then obviously the agent's going to be like, okay, so now you're not looking for anything turnkey, and anything that's not turnkey, you can literally just be like, hey, I do have my number that I need to go in, right? Would that be a waste of time? As long as you are showing a lot of respect for their time, I don't think this conversation will ever be uncomfortable. You can even say, hey, if it's a no problem, we just move on to see the next project, right? But I just wanted to know if this number is worth your time to actually drive an offer, right? And if the agent has that listing for over 2 months and the deal fell through a couple times, something like that, he or she might think, you know what? I'm going to double in this deal. Let me see what I can do. Either I provide a little kickback for the seller to make them happy, or why don't we just like figure out a way to get a seller agree to that, because maybe an event comes up, or another property is closing very soon, so we do need to make a fast decision here. So now you're getting the agent to work against their own clients unintentionally, by making yourself a little bit likable in the very beginning.
Man, that's so good. I love what you said. I want to pull that out. Listeners who are listening to this, I think it's so important, because I do feel like people, whenever they make an offer that's super aggressive, I agree with you. I've seen agents do this, or they come up with some BS story of like why it needs to be that way. Or like you were saying earlier, they insult the house. Well, it's really damaged, or it's really old. And it's like, what if a better approach was, hey man, I'm an investor. This is where my numbers work. Can we do? I think you're right. People appreciate that level of transparency and honesty, and it saves. I mean, correct me if I'm wrong, but it saves you time
easily.
Like you're not like this back and forth trying to like be all kind of manipulative. It's just direct. Does this work? Okay, let me know if it ever does.
Yeah. Because I think people misinterpret the word negotiation. They feel like they need to attack, but negotiation, in my opinion, is all about how to figure out your positionings and how to like sort of understand the psychology side of the other person. Once you can understand their motivation, right, then it's very easy to kind of work to work out a deal. And another thing I want to mention is that in real estate, you will find that, or in business in general, people love to do business with people that they like. Okay, so if you're not likable and I just don't get a good vibe with you, even if the number makes sense, we may not actually do business together. Right. So I always capitalize on that relationship. Like it has to be a decent vibe. Right. So don't go in, try to attack. The negotiation really happens at the end of the whole process. If you really want to knock off additional 20K, after the other side invested so much time and I guess emotion with you, they will want to just be like, you know what, I like you, or you know what, up until this point, I already don't have the time because I invested like a couple of weeks with you. I just want to be done with it. Right, I'm already thinking about what I need to do with that money. Right, okay, if your mortgage or your lender cannot appraise my property to X amount, I'm okay with just making it work for you. Right, that happens so many times too, like within our investing journey.
Wow,
people do that way too quickly in the very beginning.
So good, man, so good. I want to switch gears here a little bit because I know something else that you're very good at, and you did even from a very young age, was raising capital. And again, this is one of those skills that I am developing myself. I've been fortunate enough to be a good saver and put away money and be able to fund most of my deals. And then real estate appreciated and I started selling some stuff and then I had more cash. So for me, it's kind of been this nice little cycle for my wife and I to continue investing and sell stuff that doesn't make sense anymore and then redeploy that. So I've had this little machine. But for people who are just starting, and what I've started to learn is that some of the best real estate investors in the world do not put their own money in their own deals. I mean, if you look at Grant Cardone, if you look at Brandon Turner, a lot of these guys are buying huge apartment buildings, or big pieces of real estate, and they are bringing the team together. They are underwriting the deals. They are finding the deals, but they don't feel that they're responsible for the capital. They're making their investors responsible for the capital. So I'm just curious, again, I want to kind of start the same way I did with your deal machine, your deal sourcing machine of like, first, I don't believe we can copy someone's tactics until you understand their mindset. I think that's important first. That's why I'm asking you the mindset question first. Like, how do you think about raising capital? And then I'd love to get into some of the tactics with you of like, and I'd like to start this from a very beginner conversation, mainly because I'm a beginner at this. Like, what does that look like, and how do we start that process?
You're a very humble person, by the way, because when I look at your Instagram, I want to invest with you. So,
well, hey, there you go. That proves my point I said earlier. You got to put this stuff on Instagram, right?
Exactly, because your message is so clear, right? And then and you're building a community, and you put yourself out there, so the trust and transparency is there. So, and that's what people want to see. But to answer your question, what is the mindset behind it? If you know what you're talking about, because the way that I look at partnership is 3 different components. It's really people. There's a people money deal in how you structure it, but more importantly, with a partnership is money, skill, and your time. Okay, so if you really value your skill, which is finding deal, putting the management structure together, right? Obviously, the joint venture, right? The LLC and all that stuff together. If you value your skill enough, and you know that it's going to take up a lot of your time, where you need to prioritize and get compensated for that. Once you have these two, you're going to feel like the money is not my part anymore, right? So the level of confidence needs to be very high when you're I guess presenting a deal to other investor. That's why Grant Cardone and all those like Pace Morby, Ryan Pineda, all those like people who are in the real estate game, like if they're in the game for a long period enough time, they will feel like, you know what, I can do this with or without you, because I provide with the skill and my time, or my team's time, to put something together. All you have to do is to bring the cash, right? If you don't, I got other people to bring in the cash. The moment that you have that kind of mentality and really value your skill set, this raising capital becomes easy, right? Because the hardest part for beginners is that I don't even know if the deal is going to work out. I think it will, but I'm not 100% sure, which means you're not validating your skill set yet. You might have all the time you want to put into this project, but you're not even sure about your own skill set on performing or operating this project. And that's why you're a little scared of asking capital, right? So in terms of mindset, I think it comes down to the confidence in yourself.
How would you coach somebody to overcome that then?
You have to take a little steps first, right? So for example, what's your business model, right? We need to do a lot of like, in order for anybody to get to the hard pitch, which is like, hey, pitching my project, hey, raise some capital. Prior to that, there's a lot of preparation that anybody can do, like as a beginner, right?
Yeah, let's talk about that preparation. This is something you're really good at explaining.
Okay, so deal analysis, right? You have to really understand what strategy you're actually using, whether or not the market actually support this strategy, and then you can talk about the properties, right? So that needs to be crystal clear. And once you identify, because for you it's a co-living, for me it could be flips, for other people it could be multifamily, right? Or maybe we're doing a bit of a land development. The strategy has to be solid, and we need to be able to explain to other people why this business model actually can generate enough profit for myself and for the investors. So business model comes first. And then next thing is obviously whether or not this market can actually support it. So once you have those preparation done, and you're analyzing multiple different deals, and you're getting more and more comfortable, right? What's bad, what's good, you can quickly identify them. Now the step 1 preparation is done. Step number 2 is warming up your audience. People need to know what you're doing, right? So everything's about funnel, including building your investor list, right? Initially, you probably don't need a podcast. You probably don't need a YouTube channel, but you're going to have your Instagram and Facebook. And that's what most people check on you the moment that you talk about real estate or whenever they want to get to know you. So our social media is no longer for, our social circle. Now in 2023 and onwards, it's already a business profile. So we are treated as a LinkedIn profile because it's super engaging here, which means if anybody has any questions for you, you want them to click on your profile, know exactly what you're doing, and maybe see some of your projects. If they have more questions, they get to ask you and you get to reply right away. And that itself is, I think, is a top of funnel lead, right? You're generating awareness for yourself. And then the moment that you get to the warmer lead is when you say, hey, I'm working on this project. Who's interested, right? DM me the word this, right? You can do something like that. Or you can approach anybody who reacts to your post, right? You might post some of your project before, after, or in progress or whatever. Or you might say, hey, I'm looking at this deal. It looks very interesting. The number works out. I actually might be interested in jumping on that. If anybody likes or react to that post, those are warm leads. Reach out to them and just be like, hey, I see that you reacted to it. Just want to know if you or you know anybody who might be interested in investing into real estate. Boom, that becomes a hook. If anybody who's truly interested or they know someone, usually they don't like the feeling of missing out. So when you ask them if they know anybody, they'll say, hey, Sam, what are you talking about? Like, I've been like watching your content. Like, I like what you do. Right? And then can we get on a coffee, or can we get on a Zoom call, or can we get some coffee and we can talk a little bit about it? Okay, now it moves into stage sort of 3, because we talk about deal sourcing. We talk about deal analysis to really get yourself prepared. Number 2 is warming up.
Yeah.
Number 3 is self pitch, right? And self pitch usually means that you need to qualify yourself. If I got on a call,
self pitch or soft pitch?
Self pitch.
Pitch.
Self pitch for self qualifying.
Got it.
Okay, so self pitch means if you and I get on a call, I want you to know everything about me, not about the investor. I'm not trying to qualify for the investor. Investor needs to understand that I'm qualified and I'm the right operator for them. Because guess what? I'm taking their capital, hard-earned money, right? So self pitch, during that process, I never really talk about my current project. I just showcase what's a previous project I analyzed, what's a previous project that we've done, what's a projected versus actual return, how we structure the deals and all that stuff. I'm talking about, like how this can be a good business model for you to invest in, right? And if I get a yes, you know what, everything sounds good, then I'm going to be like, okay, if I have something similar to this, because I've done it multiple times, how much money would you feel comfortable investing in? So the key thing is that you want to ask how much capital they feel comfortable, not assuming they have money or they don't have money, right?
Not a yes or no question.
It's a very exactly. Yeah. It's a very gentle way to get the investors to disclose a little bit more about their saving and whether or not they're actually ready.
But I think in sales they call that like the assumptive close, where you're assuming they want to invest something. You're just saying, hey, how much do you want to invest, right? It's not, do you want ice cream or not? It's, would you like vanilla or chocolate ice cream, Ping?
That's right?
It. Okay, I'm going to answer one of those because that's the way that you're asking the question. It's brilliant. I want to go back to a couple questions here that I had as you were talking. This is so good, by the way. I think it comes second nature to you, but I want you to understand that for someone learning this game, valuable little tweaks and hacks and things to say. And I love how underlying, though, you're teaching people to be transparent and you're teaching them to just do this in a way that's authentic. So speaking of authenticity, you're basically saying, hey, look, guys, you have to have the skill first before you can pitch it. You have to have that confidence. So how many deals do you think a new investor has to evaluate before they feel confident and comfortable to pitch it to somebody?
So this is all progress, right? If you want to get ready before you post or before you let people know that you're in real estate, man, you're delaying the whole process a little too much. Right? Let people know that you're learning. Hey, I'm in Sam's program, right? I'm in Sam's community. Here's what we learned. Here's what we did this, right? Over the course of 1 to 2 months, people are going to be like, oh, okay, John is really into real estate and then he's getting some help. He's getting himself educated. At some point that you start posting an actual project, whether or not it's actually closed or not, doesn't matter. As soon as they see that journey transitioning from education community into an actual property, people are going to be like, holy shit, he's making a move, right? I've been thinking about this for the past 2 years. I just never prioritized it. Hey, John, can we get on a call and talk about this a little bit? I like what you do, right? And I say this not because in theory it works out well. We actually launched the 8-week program like 3 weeks ago. So we're on week 4 this week. I already got people messaging me, actually 5 people messaging me, hey, I got an investor meeting just by taking steps, right? But they're not sure, right? A lot of our beginner investors at this age, they were like, what do I say? How do I frame the deal? How do I do this? I'm like, listen, don't worry. You're just going to have a good time, make yourself likable, right? And just kind of have an idea of what your business model is. Get on a call and just have a conversation first, right? Because the truth is, I also don't expect you to close on anybody for the first 5 meetings, right? Get a feel of it, read the reaction, right? And then see what questions that you cannot answer, because there's definitely going to be questions that you can't answer.
Yeah.
But come back with those questions. We're going to build a FAQ list, right? Once you can anchor all those questions and have a good objection handlings, then you can handle a meeting like a pro.
I love that. I want to go back a little bit to, you said there's 3 things for somebody that they need in order to make a deal work, right? You said you need money, you need skill. When I teach this, sometimes I'll call that like the specialized knowledge. Same thing.
Yeah, same thing.
And then you need time. So let's say someone doesn't have any of those. They don't know how to invest in real estate. They have a full-time job and they're pretty busy with their family, and they don't have a ton of capital. What's your advice? Because this is not, a lot of times I'll come across people in this boat. They're like, I want to invest in real estate, but what's your advice for someone on where do they start first in this journey?
Oh, it has to be skill, right? And
It has to be skill.
It has to be skill, because here's the thing: transitioning out of your full-time job is a very irresponsible decision for yourself and for your family if you don't know what the plan is, right? So I always like to figure out how to get that skill first. And you can either try to do that on your own, or you can really shorten skill set by finding the right mentor, right? And just let the mentor showcase or process the deal with you so that you understand the mindset and the approach, or even the tools that you need to use, right? So skill has to be there. And this is, again, everything can be broken down into such a baby step, right? Start with podcast, right? Listen to like all the podcasts that you put out about co-living. At some point, you're going to be like, okay, I understand what Sam means about co-living, about like student rentals, could be like anything else, right? So number one skill set is always skill. And another thing is to figure out how to network with other people locally, right? Some people's gotta have done things that you've done. Have done things that you wanted to do in the next 6 to 12 months. Connect with them, right? Let them know what your obstacle is, what your fear is, and what you're uncertain, and what are they actually doing in today's market, right? Once you gather all that knowledge, and then the next thing, like if that gives you enough confidence on whether or not you can actually perform a deal, then the time components will come up automatically, because now you're like, I really like, I understand this. It's not that hard. Now 50K, there's a 50K profit in this project if I can just put them together. If you're still not prioritizing that, dude, this is not for you, right? This investing game is not for you, or running a business is not for you, because you can't even prioritize that. It just means that you don't think it's important enough, right? But to answer your question, skill set first, and then time components will come in, and then use that to figure out how to raise a bit of capital to actually close that deal. That's
beautiful. So my last question, and then I want to talk about your 8-week course a little bit, is, so let's say, I've done these steps that you've mentioned, right? I've learned the deal analysis, and I might be missing a couple of them, but I've learned to warm up my audience. I've soft pitch, like you're saying, me, like who I am.
Yeah.
How do you say that step? That's
self-qualifying yourself.
You're qualifying yourself. Yeah. And then if that goes well, the next step is hard pitch?
No. So,
yeah.
Yeah. So, you know what? I probably combine these two together. So soft pitch is more like testing the interest. And then you do the self-qualification. After that, you can actually just drop a couple projects. Hey, by the way, a project that's very close to what we discussed just comes into like our pipeline, right? Like, I'm actually thinking to close that. Would you be interested, right? You're doing a bit of testing to confirm their intention here. If they say yes, boom, you can fire up. You can send the letter of intent, right? Or usually it would be the CA, confidential agreement, right? Get them to sign. Make sure that they don't disclose that information. Once they sign that, you send them the documents. If it's good, jump on a call. Go over the details of the strategy, and then if it's yes, this amount, okay, let's get a letter of intent signed before we move into the joint venture agreement.
Got it.
So the hard pitches are at the end. Like, I never do a hard pitch until I know they're actually ready. If you're not ready, right, I just keep I keep going back and forth between soft pitch, which is testing the intention a little bit, and the self-qualification, because there has to be something that's not sitting with them correctly. It might be because, hey, this is something that I just don't understand, and they haven't asked that question yet. So I want to anchor these two steps before I bring in an actual deal.
Do you prefer having investors that are just loaning you money and you're paying them an interest rate? Or do you prefer having investors that are actual joint ventures, like they're actual equity partners in that home? Let's say a co-living home, for example, and I need, let's say I need $50K for close on a co-living home. I mean, how do you coach people on how to structure that deal on the back end? One of the ways that I think is like super simple, but I'm curious your thoughts on this, is like, hey, you give me $50K, I will personally guarantee this loan to me, and I'm going to pay you 8% interest, 9% interest. Now, not everybody will go for that, but like people that have money in a 4% savings account might go for that if they trust you and they like you and they know you. So what's your take, and how do you coach people on thinking about how to do the back end of that deal, or when it's actually getting ready to close?
Yeah, I'm going to kind of break it down into a couple different asset classes because I noticed my own pattern as well. For house flipping project, I like to do interest only, right? So lenders, right? They offer me with an interest only loan, and I try to either push that loan to the end of the project or like the end of the year, something like that, right? So I like to do that to avoid the lender's fee, and also it's all fully funded. So if the project doesn't go as well as I expected because of the market fluctuation, I get to do a refi, pull some capital out, pay them back, and provide a bit of a cash relief, and then just hold that project a little longer. So interest pay, private lending is really for house flipping. Anything buy and hold, I want them to be more like an equity partner, simply because then I have one less payment I need to make out every single month. And then the way I structure the deal will be either 3 to 5 years. Okay, smaller deal, I might do like 2 to 3 years, or depending on the market. But I want to hold that and then have a deadline on selling that property. If a 3-year term has come up and we're like, hey, the market's still not good, the only way for us to not to sell that project is when everybody agree to continue to hold that property for additional year. So I do like 3 years at 1 year renewal for the equity partner. Okay. Multifamily, same thing, because I'm holding it. So I want people to be participating as a equity partner. But with multifamily, something slightly bigger, I may not go with a joint venture. Sometimes I might go with a syndication approach where I kept the investors a bit of a return. So maybe the first 8% is a preferred return. After the next 3%, I need to take it as a general partner. And then after that, we do 50 split. And if the deal is so big, maybe after 25%, I'm going to want to keep 80% of that. So it's kind of like waterfall structure. Yeah, that's where we're heading towards. We've structured a couple of deals like that, but moving forward, bigger deal, I think I'm going to be doing that.
But with a $300,000 or $400,000 house, you would say just structure it like some sort of joint venture where they have equity in the deal. That's how you would recommend?
Yeah. Because here's the thing: it's like the moment that you have by the way, like if there's a value add components where you can do a refi and pay back the investors for their high interest loan, then yes, like I wouldn't mind structuring something like that. But for any buy and hold, I just don't want to have that kind of stress. So my way doesn't mean it's the best way. It's just like it works out the best for me.
Right. Got it.
Right? So for anything buy and hold, yeah, I much prefer them to be an equity partner. And then from there, if I want to create a bit of cash flow, I might have a certain building service fee, like property management fee, acquisition fee, so that every time we find a project, we close on it, right? I get certain payout from the project, but everybody is an equity partner for the next 2 years.
Got it. Wow. Well, man, this has been truly gold. Thank you so much for your wisdom and dropping all of that. Would you tell us a little bit about your 8-week course and kind of what it walks people through and how people can find out about it and how often you run it and all of that?
So it's a very new program that we launched. It's completely free. And the reason why I just keep it completely free is because I do want more and more newer investors to join into real estate field, right? Get some knowledge without having to feel the need to pay for a mentor, right? At least get a general understanding first. Start taking a bit of baby steps, because at some point you will either consider, like if you're able to handle everything by yourself and learn and go through that learning curve on your own within the program that we offer, great. Then we do business together, right? You might have a deal flowing in. You might have a couple other investors that you're not confident enough to have them invest in the project. hey, guess what? I got the deal flow, right? I got a project for the investor, right? And if you're unable to actually make something out of it, maybe you need a little bit more extensive training, right? This is where, and I'm not saying it just for our own program, to anybody, right? Find something that you like the most, right? And from there, if within that 8 week you can make something out of that, find a mentor who can hold your hand, right? At least get through the first 2 months so that you can, at least start taking some actions. Okay, so 8 week program, we're doing that on Tuesday for deal sourcing, Thursday for capital raising. And currently my team is pushing it to be doing that every single week. Okay, so in the next 4 weeks, we're going to be done. And then I think we're going to either take a 2 week break and relaunch it again completely for free, just to get people educated in this space.
Wow. That's amazing, man. So good. Where do people go to find out about you, to follow you, to keep up with your progress and everything you're doing in this space, man? It's really valuable.
Yeah. So my Instagram is probably the best way to get in touch with me. So it's Ping_real estate. And
easy.
Yeah, we're posting a lot of stories and posts for the 8 week training. So if you follow me, you will find the more information.
Yeah, and we'll put that link in the show notes and everything as well. So, well, man, it's been a pleasure. Thank you for bringing your wisdom today. And I know we went a few minutes longer here, but great stuff. And just this was a very valuable episode for me personally, and I know it will be to a lot of listeners.
Awesome. I appreciate it.
All right. I told you that was amazing, wasn't it? There are some actionable things. I'm not the guy that likes to get on here, these podcasts, and just have a great conversation that sounds cool. I want you to be able to walk away with something very specific that you can take action on. And hopefully you got that from the episode today. Now, write down one thing before you end the episode. What are you going to actually take action on? How are you going to move your life forward based on the information and the time that you just invested listening to this amazing episode? God bless you guys. I'll see you on the next episode. Go get them.